Winter comes to Texas, but the markets look past higher oil prices and keep their focus on earnings and interest rates and getting back to business. This is Bloomberg Wall Street Week. I'm David Westin. This week, not one but two economists from Harvard, special contributor Larry Summers and Ken Rogoff. Former Energy Secretary Dan Brouillette.
In years past, we built the utility systems in America to provide energy when people needed it, when they needed it, like right now.
Nancy Davis of Quadratic Capital, Arindrajit Dube of UMass Amherst, and Eric Toone of Breakthrough Energy Ventures.
Texas has a grid that is limited to the state of Texas, and then they have virtually no storage.
We spent most of this week riveted by the havoc played on the power system by the record cold in Texas. And long before they got the power back on, the debate began about what went wrong and what could be done about it.
I believe that to blame solar and wind, and as some politicians are doing now, is not the answer.
And when we weren't looking at Texas, we were talking about GameStop, as Congress hauled what he had thought were the usual suspects before the Financial Services Committee. And not for the first time, it didn't appear to signify much, despite a lot of sound and fury.
Is it your testimony after Robinhood paid the SEC $65 million to settle those charges that this conflict of interest is in your customer's best interest? Yes or no?
Robinhood can restrict trading. In other words, you seem to reserve the right to make up the rules as you go along.
No, it continued to be earnings, inflation concerns after blowout retail sales data, and the promise of vaccine that kept markets moving right along. Now, to be sure, for the week there were some small declines, at least some of the majors, with the S&P down 0.7%, and tech and the Nasdaq giving up the most at 1.6% down. But the real story was in bonds, where the spread between the 2- and the 10-year Treasuries expanded by 13 basis points, the steepest that it's been in 4 years now, with the 10-year yield ending up the week above 130 basis points. We need to get a broader perspective on what's going on here, and for that we have an economist, Ken Rogoff, professor of economics at Harvard, and an investor, Nancy Davis, Chief Investment Officer at Quadratic Capital. So welcome to both of you. Nancy, let me start with you as the investor. You focus a lot on interest rates. When you look at the equity markets, which really have held up quite remarkably over the last recent weeks, is it because of the fundamentals such as earnings, or is it really interest rates because they've been so low?
I think it's everyone getting ready to resume and get back to normal. So I think the equity markets in particular are very forward looking, and they're seeing the clouds lifting and back to normal and are really projecting growth. I don't think it's necessarily a result of interest rates. I think the rates market is actually the one that is catching up to equities, because the 10-year, if it was a more normal environment, it would be pricing in an even steeper yield curve, which is actually healthy for Main Street. The whole banking system is premised on borrowing short-term, lending long-term, and the way for the Fed and the central banks around the world to really stimulate lending is to get a healthy upward sloping yield curve. Back in 2013, the yield curve was 250 basis points, and that was just normal. So we're really excited about seeing more normalization in the bond market, and I think it's a very healthy sign for Main Street as well as the financial markets.
So, Ken, as an economist, is that the way you see it? Is basically, does the economic data indicate that the 10-year is actually lagging and is just catching up with the equity markets and what the economic data show?
Well, I completely agree with Nancy. The equity markets are very forward-looking, and they sort of see the vaccines coming, and they see this being over and are looking at that. I do think the interest rates are part of the story too. I mean, when interest rates are nearly zero and they're still projected to be very low for a long time, it makes equities, it makes anything look pretty good. It's bid up all asset prices much more than before. So yeah, I mean, it's a variety of things. And of course, there's this gap between Main Street and Wall Street, in that the stock market does not include small and medium-sized businesses so much. It's not including a lot of the service sector that's really the hardest hit, the low income. So I think that gap's going to continue. And of course, the Federal Reserve and the government are sort of trying to stimulate everyone, but Amazon doesn't need stimulus right now. They don't need a 0% interest rate. It's really a different part of the economy, but the government doesn't really have a way of getting in a targeted way at the people who need the most. And so we have pretty hefty stimulus in the pipeline.
Well, Ken, just to pick up on that, as you well know, Larry Summers, your colleague, is warning that this $1.9 trillion may be a little too much, maybe a little too rich. Should we be at all worried about inflation, given where the output gap is and how big this stimulus looks like it's going to be?
Well, I think it's always worth listening to Larry. And I agree that there are definitely some short-term inflation pressures. But the question is, is it going to really change the underlying dynamic? I'm concerned about inflation over the much longer term for lots of reasons, demographics, globalization. But short term, I think there'll be some upward push on inflation, but I'm not sure we'll really see a loss of the anchor of expectations. That's really what the Fed's going to look at. And if that's not happening, they're just going to look past it and not raise interest rates. And I suspect that's what will happen for quite a while.
So, Nancy, you spent a lot of time on fixed income and looking at yields and things. Are you at all concerned about inflation? Or maybe I should ask, are we talking about reflation or inflation? There's a difference.
Well, I have a pretty different way of looking at inflation. I know most economists and investors, they look at various indices that are created, like, for instance, the CPI index is created by the Bureau of Labor Statistics. But I think that's like saying I own the equity markets and I have the Dow Jones, therefore I own equities. I think there are other ways that you can look at inflation and inflation expectations. And I think the yield curve is a more market-based measure, in my opinion, of that inflation and inflation expectations, that term premia. Like, if you think about it, the Fed has convinced the market that interest rates are going to be on hold for a while. The 2-year interest rate is currently 10 basis points. If you go out to a bank and you opened a 10-year CD, currently today you would only be paid 1.22% more, and that's that spread that you're showing on the screen, to lock up your capital for 10 years. So to me, the yield curve is a more market-based measure of inflation expectations, and it's trading well below normal levels. Even back in 2013, when policy rates were near their zero bound and we were coming out of the European debt crisis, it was just normal to have it be, 2.5% return on capital, assuming that you believe inflation will be coming. So I do think the yield curve is a broader measure of inflation expectations, and it takes it away from that CPI basket, which to me, the biggest downside of that is a huge component is shelter. And shelter, if you dig into the Bureau of Labor Statistics calculation, it's mostly owner-occupied rent, and a lot of it is urban rent. So I don't think it's the best or only measure.
So Ken, are you concerned at all about the Fed's messaging on this? Because they certainly have been saying again and again, and we're not even going to think about the possibility of raising interest rates. If, in fact, they have to do that, as perhaps the vaccine kicks in, people come back, they have all that savings they pump into the economy, they have to make a move. Are the markets prepared for that possibility?
The markets are not prepared for that possibility if it happened. And certainly the Fed starting its hiking cycle anytime, and certainly sooner than the market was expecting, would be, a cold bath, a cold shower in the market. But that said, I think the Fed, on every, message it can have, it said, if inflation goes up, we're not worried about it. We'll let it be high for a while. Inflation is very slow moving. And again, I'm very worried about the longer term. I'm very worried that the stimulus is followed, which I wholeheartedly support, by the way, is followed by another and another and another. The economy normalizes and they don't stop, and people start to lose confidence. But it drifts very slowly. I think we don't know a lot about inflation expectations, but what we know is they move very slowly, at least in economies like the U.S.
Okay, Ken Rogoff and Nancy Davis will be staying with us as we turn from the broad question of the markets to the specifics of the market frenzy over GameStop and Bitcoin. This is Wall Street Week on Bloomberg. Lawmakers took their turn at trying to figure out who's responsible for the GameStop trading frenzy. The House Financial Services Committee questioned hedge funds, social media, and brokerage heads who were at the heart of the battle between short sellers and retail investors. Hedge funds took some heat for their role in the volatility.
Who gets the better deal? The one that comes from a broker who is being paid for order flow, and one not.
So, as I said earlier, size of the order is only one factor.
You are doing a great job of wasting my time. If you're going to filibuster, you should run for the Senate.
Social media, namely Reddit, was the platform of choice for retail investors to spread the message to target GameStop as a way to stick it to the Wall Street establishment.
What steps is your company taking to guard against this? Anything at all?
Congressman, we spend a lot of time at Reddit ensuring the authenticity of our platform. And in this specific case, we did not see any signs of manipulation.
Keith Gill, who goes by the online nickname of Roaring Kitty, was one of the leading voices pushing the GameStop trade on Reddit. He now faces a lawsuit that accuses him of misrepresenting himself as an amateur investor and profiting by artificially inflating the price of the stock.
I also believe the current price of the shares demonstrates that I've been right about the company. A few things I am not. I am not a cat. I am not an institutional investor.
And then there's the issue of online brokerages. Robinhood CEO Vlad Tenev defended against claims that it aided hedge funds and restricted customers' trades of GameStop to meet clearing demands.
Look, I'm sorry for what happened. I apologize, and I'm not going to say that Robinhood did everything perfect.
Ken Rogoff of Harvard and Nancy Davis of Quadratic Capital are still with us to make some sense of the sturm and the drang of Reddit, Robinhood, and GameStop, and for that matter, Bitcoin as well. And I think it's fair to say none of us are cats either. We should get that right on the table. So, Ken, let me go to you first of all. A lot of talk about democratization of the markets. Is that an economic good? Is that something we want to pursue? Is democratization of the markets?
Well, I think it is an economic good as long as it goes with, transparency. I don't think there are any clear villains in this, by the way, but my main concern would be for some, poor trader who put all their money into this as it's a bubble. What else can you call it? Is it was going up and then lost it all when it popped. It can happen a lot of different ways. But no, I think this is probably something that's here to stay. It's probably going to get regulated a little bit, but I think it's probably overall a healthy development.
So Nancy, as an investor, does this influx of retail investors through Robinhood and other means, is it changing your business at all? Is it changing the markets?
I mean, I do think everyone is able to access financial markets. And I think it just goes to show how financial literacy, no matter what your field is, whether you're, in any industry, whether it's finance or whether you're, whatever field, everybody has savings and everybody needs to know how to invest their money. And I think especially being a woman investor in this rather male-dominated industry, I think it's a good thing. I think it's a healthy thing that investors are being focused on. And I don't think retail investors are not knowledgeable investors. I think retail investors can be very, very powerful, and we really saw that democratization happen. And I think the amazing thing is with technology, you can have access to so many different ways to learn about markets and so many different avenues. And I think it's a real positive thing that generally most people are getting interested in their savings and what to do with their money.
So, Ken, you mentioned a bubble with respect to GameStop and maybe some of the meme stocks. When you say bubble this week, you have to think about Bitcoin. It ended up somewhere north of $55,000 now. What is going on with Bitcoin? And is that a situation where people need protection?
Well, first of all, I mean, clearly some very, investors with big reputations on Wall Street, Elon Musk, have very, vocally gone in, and that's really generated a lot of support for Bitcoin. At the end of the day, there's sort of a question of what is it? What can you do with it? There's certainly a lot of, there's some transactions where people are getting their money out of places with big capital controls and war-torn states, and it's being used for that. But I think in the long run, it's going to get regulated a lot more. Maybe it has some very influential people behind it to try to stop that. They won't succeed. Every central bank in the world's focused on this, and it's not going to really come into the mainstream in terms of transactions ever. The central banks won't allow that. It just doesn't have the transparency.
So Nancy, you're an investor, at least I think of you as an investor, not a trader, much less a speculator. Is it really something you can invest in, Bitcoin, as a practical matter? What are you investing in? To pick up on Ken's point, what are the fundamentals of Bitcoin? I don't know what they are.
You know, I do not invest in Bitcoin personally. I manage the Quadratic interest rate and volatility inflation ETF. I think if people are buying Bitcoin because they're worried about inflation or, you know, the dollar losing value, there are definitely other tools that they can look at. So I really don't have, you know, I do kind of agree with Ken that it does seem a little bit like a bubble. I don't really get why it's up, especially when you look at other cryptocurrencies. Why is that one doing so much better than the others? It does seem confusing.
So Ken, you've done a fair amount of studying, I think, and some writing on Bitcoin. When we talk about democratization, we tend to think of Bitcoin as, well, that's a way to get away from the governments and stuff. But I have read that, in fact, there's a relative handful of these miners, many of whom are located in Belarus and Russia and China, who are doing this. How democratized is Bitcoin?
Well, I wouldn't want to underplay it in the way it's being used. But the thing is, the idea that you can get around the use of the dollar, by the way, a lot of Bitcoin trades, a lot of the way when it gets out of a place with capital controls or, you know, avoiding a war-torn territory, it actually involves cash trading for Bitcoin. But at the end of the day, we've had all kinds of innovations from the private sector over the years. The private sector invented coinage, probably. It certainly invented paper currency. Over the years, the government eventually regulates and appropriates. They're not going to allow a lot of transactions to take place they can't see, so they can't collect taxes, they can't enforce laws, et cetera. So I think over the long run, central banks are looking, they're all working on their own digital currencies, that's coming. But the idea that it would be Bitcoin, to Nancy's point about what's special about it, I don't know either. It seems like it could produce a clone. On the other hand, it's proven very robust. I don't know if it's almost like a form of modern art that, you know, in the year 2100, you'll go to a Star Trek convention and buy a signed Leonard Nimoy poster with Bitcoin or something. I'm just not quite sure, you know, where it's going to be in 50 years.
That's an idea. Just briefly, Ken, the governments might not like it, but can they stop it? As a practical matter?
Well, they can't stop two people anonymously trading, but if they want to go, you know, convert it into a purchase other than illegal arms or something the government's not tracking anyway, of course the government can. The governments can crack down, as China has, on how much you can use it in retail stores, how banks can take it. The governments have enormous power. There will be a market in war-torn states, and if somehow things get really horrible everywhere, it could be, you know, something that comes up. I sometimes describe it as a bet on dystopia. But yes, governments, as long as they have power, have quite a bit of means in order to prevent it from being used in ways they don't want.
Nancy, to wrap this up, and I'm afraid it's going to have to be very brief, is this a result of too much money sloshing around, just too much liquidity?
I don't think there's too much liquidity. It's really about where the liquidity is going. It seems like there is obviously a ton of liquidity, but there are still a lot of businesses, small businesses, people that are suffering from the effects of the pandemic. And so I think it's not necessarily, it's just directing it, as Ken pointed out. You know, we have to get the money to small businesses.
Right. That's the chore. So thank you so much. Great to have you both with us. It's Ken Rogoff of Harvard and Nancy Davis of Quadratic Capital. Coming up, President Biden insists he wants the federal minimum wage raised to $15 an hour. But will it cost more jobs when we still have almost 10 million people out of work because of the pandemic? We ask economics professor Arindrajit Dube of UMass Amherst.
So overall, I think that ends up lifting people out of poverty and being a relatively good thing.
This is Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Westin. The federal minimum wage has been $7.25 an hour since July of 2009. And Democrats have been calling for a national increase, even as 20 states couldn't wait and raised their minimum wage on January 1. But will some employers hire less people if they have to pay them more? Economics professor Arindrajit Dube of UMass Amherst has become a leading expert on the subject, and he has his doubts.
Overall, the most up-to-date body of research, in my opinion, points to a relatively limited effect of minimum wages on jobs in U.S., in U.K., and other developed economies. At the same time, it significantly increases wages, earnings at the bottom. So overall, I think that ends up lifting people out of poverty and being a relatively good thing.
So the Congressional Budget Office has done more than one study on this, and I've read at least the summaries of them that concludes that on the one hand, what you said is exactly right. You raise a lot of people out of poverty. On the other hand, you lose jobs. Last estimate I saw was like 1.3 million or 1.4 million if you go to $15 an hour minimum wage across the entire country.
Yeah, so I think it's sometimes it's hard to interpret what that 1.4 million means, the top line numbers. Is it big? Is it small? The way to think about it is this. The CPO analysis suggests there will be job loss, 1.4 million fewer jobs. At the same time, wage gains are far larger than that. And so as a result, it ends up lifting people out of poverty and actually increasing earnings overall for working people. Having said that, let me also say that I actually think the CBO analysis is more pessimistic than what I found.
Now, we hear from some executives, like the CEO of Walmart, who says $15 an hour, it makes good sense in some parts of the country, but not across the country because the cost of living varies so much across the country. How do you respond to that?
Well, that's interesting because Walmart has a minimum wage. It's $11 an hour. It actually is the same in all states. And so that's an interesting point because they actually chose a national minimum wage, which was voluntary but was binding exactly the same way. Same is true for Target, which is a $15 minimum wage, exactly the same across all states in the United States. Same is true with Amazon, a $15 minimum wage, the same across every state. So I think there are different pros and cons for having a set wage. Right. Here's the way I think about it. That the federal minimum wage is the floor. Beyond that, 30 states currently have minimum wages that exceed that, okay? 40-plus cities have minimum wages that exceed that. My guess is that's going to continue to be the case in the future as well. Right. So the question becomes then for us, what floor should we have at the national level?
That was economics professor Arindrajit Dube of UMass Amherst. Coming up, what the freeze deep in the heart of Texas may tell us, or not, about the move to clean energy. From Eric Toone of Breakthrough Energy Ventures and former Secretary of Energy Dan Brouillette.
This event will absolutely change the way that Texas does things.
When people may need the energy like they do today, the wind may not be there and the solar may not be there.
This is Wall Street Week on Bloomberg. A snowstorm and brutal cold hit an unprepared energy system and left nearly 5 million customers in Texas, North Dakota, Arkansas, Louisiana, and Mississippi in the dark. Power companies in affected states had to resort to rolling power blackouts to save their networks from collapsing, leaving households and businesses without power and heat.
What is our priority for keeping the lights on and the heat on or the air conditioning on to people in situations of extreme weather?
In recent years, power grids have come to rely more on wind and solar power to meet increasing electricity demands. But the alternative energy sources can sometimes vary with the weather, and this weather was severe enough to hit both wind and gas-fired generation in Texas, and there wasn't enough reserve power to keep the lights on, or the heat, or even the water in some places.
You cannot force a government mandate on certain things that aren't ready to supply the basic needs of people.
To make things worse, the winter storm crippled U.S. oil and gas production, reducing it by more than a third. In the Permian Basin, major producer Occidental told customers it would be forced to curtail oil deliveries, while Chevron shut some wells in the region. More than 20 refineries were disrupted by the polar blast, sending gasoline futures surging.
This is a timely reminder for a wake-up call, really, and saying that, yeah, we absolutely need fossil fuel in the mix. It's about how we get it greener.
Temperatures in Texas were low enough to freeze oil and gas liquids in pipelines laid on the ground just as the cold caused demand to jump.
As we here in Texas have said that renewable energy has priority on our grid, we've discouraged people coming in and building power plants that run off of natural gas, which is more of a reliable source than as everyone knows, wind and sun is.
This energy crisis is severe, but not new. Almost a fifth of the power capacity in Texas failed in February 2011 during another cold snap, and California suffered blackouts during a heat wave last August, not to mention multiple wildfires that in recent years have been linked to its power grids.
I mean, this situation to me is very reminiscent of Hurricane Katrina. And then over the course of the following week, it suddenly, emerged as a horrendous disaster.
Different experts have different views on what caused the Texas power crisis and what needs to be done about it. The Secretary of Energy under President Trump, Dan Brouillette, says the fundamental problem is moving too far and too fast toward renewable energy.
There is a fundamental flaw in our policy and our system here in the United States. Obviously, the weather is having an effect on the energy grid, but it's important for us to remember that the weather is not the actual cause of the rolling blackouts that we're seeing across Texas and other parts of the United States. It used to be, David, in years past, we built the utility systems in America to provide energy when people needed it, when they needed it, like right now. And what we've done is we've moved away from that. That's what I just described is known as base load power. We've moved away from that to a more intermittent and frankly, sometimes less reliable form of energy in the sense of wind and solar. And when people may need the energy like they do today, the wind may not be there and the solar may not be there. So what we've done is we've moved away from that energy security that we used to have here in the United States. And further, David, we've exacerbated the problem by, in some cases, making the base load power, and what I'm speaking to are the pipelines, the natural gas pipelines, dependent upon this intermittent form of energy. So when those windmills didn't blow in West Texas, that means the compressors on those pipelines didn't work, and that natural gas perhaps didn't reach those natural gas utilities in other parts of Texas. So we've got to address this very squarely and have a very honest conversation about renewable energy in America until we can reach the point that we have grid scale storage and battery technologies that allows us to rely on this energy 24/7. It's important that we not put ourselves in a situation where we're dependent upon it.
Well, and Dan, that was going to be my question. How much of this is a storage problem? If we had the storage problem fixed, would it take care of things like solar and wind?
Well, it would, David. That's really the challenge. Today, renewable energy does not have the ability to provide what we refer to as grid scale storage or 24/7 storage. So in that sense, it is dependent upon natural gas, nuclear, and coal in certain instances to provide that backup power. But if you've made the backup power also dependent upon the renewable power, you've got a real challenge. And that's what we're seeing in Texas today.
So to what extent is this irrevocable in the sense that coal has become increasingly inefficient monetarily, economically not so feasible? So we have to move away from coal. And if we move away from coal, where are we going?
Well, I think we are going to eventually end up, with very clean forms of energy. It'll be things like fusion, nuclear fusion technologies, smaller nuclear technologies that have zero carbon emissions. We're going to see a lot more solar energy, a lot more wind energy. That's the transition that the world is moving toward. The challenge is if we move there today without baseload power, we're going to continue to see the problems that we're seeing today in Texas. Again, I'll state the point. It's not the weather that's the problem. It's the policy that's the problem.
And what about the grid? Because I also have heard in the last 48 hours some talk about the Texas grid being different from some others, that it's more independent, that it's not as easy to transfer power from Texas, outside of Texas, to other surrounding states. Is that true?
That is true. Texas has run the regulator there. It's known as ERCOT. That's the grid manager within Texas. And yes, they are somewhat isolated from the rest of the country. There are instances, for instance, during the hurricane season in Louisiana, where I issued an emergency order to allow electricity to move from Texas to Louisiana to help the good folks in Louisiana recover from the hurricane. But those are unique events. By and large, the ERCOT system, the Texas system, is independent from the rest of the country.
That was Dan Brouillette, former Secretary of Energy. But others say that it is wrong to blame the problems in Texas this week on wind and solar energy. There's a more fundamental issue of energy reliability. According to Eric Toone, he's managing director of Breakthrough Energy Ventures. We should instead focus on the underlying weakness of the Texas approach to its energy policy.
Texas has a grid that is limited to the state of Texas. ERCOT is unique among electric grids in that it's only for the state of Texas. So they have very limited transmission. And then they have virtually no storage. Unlike other states, Texas doesn't store natural gas. They basically take it straight out of the ground and put it into the pipeline. They don't store energy that's produced by winds at times of surplus, so it's available at times of need. And so what happened here is everything went down simultaneously. And fundamentally, the problem was water freezes. Water freezing is what caused the turbines to stop. Water freezing is what stopped natural gas coming out of the ground, because natural gas comes out of the ground with hydrocarbons and with water that froze up. Water freezing is the problem that what caused the nuclear reactor to go down, right? That was a cooling line. So fundamentally here, the problem is water freezes. That's an unusual event in Texas. That had ramifications for generation across the board. Renewables, natural gas, even nuclear. And with no storage and very limited transmission, reliability goes away. So that's fundamentally what happened.
Well, and that raises a question, in my mind at least, whether this is a technology issue, a climate issue, or a business model issue. Is in fact the case that Texas largely has decided to run their system away to maximize profits, which means you don't spend as much in overproducing, having excess capacity and storage?
I would say that the business model is a significant part of the problem. Texas also doesn't have capacity markets. Electricity markets are very complicated things. You have markets where you pay people to produce electricity, but you also have forward-looking markets that pay people for capacity. Texas has not used capacity markets in the past, and I think it's something that they may want to look at, especially if they're going to keep an isolated grid.
Eric, over the longer term, we are moving toward renewables. It's pretty clear across the country, and the Biden administration wants to move us there faster. Does the Texas experience tell us anything about how fast we can and should move, and particularly when it comes to storage? Because as I understand it, there remain some real issues with storage from renewables.
Well, I think that we have to think about reliability. As we move to an era of electrify everything, and that's absolutely where we're going, the size of the grid is going to grow. So you have to think about what new generating assets that you're going to put on to supply that power. In very large measure, those assets are going to be renewable. They're going to be wind and solar and other forms of renewable energy, in part because they're green and don't produce greenhouse gases, but in large measure because they're the cheapest form of generating, right? So just the market would dictate that that's the way that you want to go.
The Biden administration is talking about a major infrastructure plan. They call it Build Back Better. And many people now are saying part of that needs to be our energy infrastructure, getting ready for renewables. What can be done?
Well, it absolutely has to be a big part of that plan, not just getting ready for increased renewables, but for increased capacity in total. If you start electrifying everything, if you start electrifying heavy industries, you're going to need a much larger grid. And so thinking about how that grid is going to operate, thinking about how we can introduce expand transmission, how we can manage flows of electricity on the grid, make the grid smarter, all of those sorts of things, and storage at different time domains will be an important part of that infrastructure as well.
You understand the energy structure so terribly well. If you were going to guess right now, do you think this is a big enough event in Texas to make Texas rethink their business model? Or for that matter, can the federal government put their thumb on the scale and encourage Texas to change the way they're regulating their industry?
Well, they could, but I don't really think that that's the best way to go. I think that decisions about Texas are probably best left to Texas. But this event will absolutely change the way that Texas does things. And you can hear whispers on the internet already about capacity markets and building those kinds of things into the Texas energy ecosystem.
That was Eric Toone of Breakthrough Energy Ventures, the organization Bill Gates founded to invest in sustainable energy. Michael R. Bloomberg, founder and majority owner of our parent company, is an investor in BEV. Coming up, a look at the week ahead on Global Wall Street. This is Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Westin. It's time for a look at the week ahead and what to expect on Global Wall Street.
David, here in Hong Kong, we'll be tracking the budget announcement, which follows data showing the unemployment rate climbed to a 2004 high in January. Plus, we'll get the report card from Hong Kong's exchange operator. The city is having the best ever start to a year for first-time share sales. Budweiser Asia and Qantas earnings also on tap. From South Korea, the central bank is expected to hold rates at its Thursday meeting. We'll be looking for clues on bond buying as lawmakers plan a fourth round of cash handouts. The BOK flagged concerns that a consumption recovery could be delayed as households boost their savings. Danny?
Thanks, Sophie. In Europe, the focus really is going to be about the plan for reopening and those plans that are announced over the next week. On Monday, the UK unveils what it's going to do to take the country out of a lockdown. And then on Thursday, we have an EU leader summit, which is virtual, of course, where they'll also discuss vaccine distribution and travel restrictions. Romaine?
All right, thank you, Danny. Investors will have a lot to parse this week, especially coming out of Washington. Fed Chair Jay Powell will be on Capitol Hill for 2 days in a row, delivering the central bank's semi-annual monetary policy report to Congress. Treasury Secretary Janet Yellen, she's going to be attending that G20 finance ministers meeting virtually, of course, towards the end of the week. And the House of Representatives is scheduled to have its first full floor vote on President Biden's $1.9 trillion stimulus package. The goal, to try to get final passage sometime by March 14th. We will get economic data as well next week. Home prices, durable goods, and consumer confidence among the notables. And earnings season, not quite over yet. Keep an eye out for reports from NVIDIA, Home Depot, Etsy, Salesforce, and Royal Caribbean. David?
Thanks to Sophie, Danny, and Romaine. Coming up, we wrap up the week with our special contributor, Larry Summers. This is Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Westin. We cannot end a week on Wall Street without turning to our special contributor, Larry Summers of Harvard. So, Larry, welcome back. You've been outspoken on this program and elsewhere, saying that you have some concern about the $1.9 trillion stimulus package, that it might overheat the economy. We're now getting some economic data in. From what you're seeing, are you more concerned or less concerned than you were before?
Probably a bit more concerned. The Atlanta Fed this morning said that its nowcast for first quarter GDP is 9.5% growth at an annualized rate. That's higher than most other observers. I guess it's too high, but it does say that there's likely to be substantial spending, substantial growth and purchasing power. I think there are a lot of reasons for it, but bond yields have backed up considerably in the last several weeks. You've got a Treasury, 10-year Treasury in the 1.3 range. I think there's a growing sense of concern.
Well, let me pick up on that, because I think some people may have not fully understood. As you say, you haven't said that we don't need a lot of support for the economy and even don't need to spend a lot of money. In fact, you've said, really, given interest rates, it makes sense. But it's a question of what the money's going for. Is it for consumer spending or is it for investing in the economy? And let's connect that with jobs, because Jay Powell, as you know, has been very concerned about jobs, has even talked about federal jobs program. What do we need to get jobs? Because we're still almost at 10 million people unemployed today who had jobs before the pandemic.
So you raise a couple of very important issues there, David. I'd rather see us investing money that expands the economy's capacity than simply making transfer payments. What's remarkable is that the advocates of this program, like Paul Krugman, when you put to them that it may overheat the economy, they say, no, it won't. People will save the money and people will use it to pay down debts. And I can't imagine a lower priority use of federal resources than improving consumers' balance sheets rather than repairing the country's infrastructure, making tests available for people to be vaccinated, starting investments in a green economy, doing things for pre-child education. So the defense of the program that claims that what it's going to do is begin a process of consumer balance sheet repair at a moment when, by the way, consumer credit is extremely strong, I just don't relate to that as a central concern as well. There are plenty of tasks that are vitally important that we can make public investments in, but we give up all of that if we put the focus on transfer payments. We also don't help employment any when we pay people more to not work than they were making to work. And what we are going to legislate is an unemployment insurance program that for the substantial majority of its recipients is going to give them significantly more money when they don't have to commute to work, when they have all the time to take care of their kids, to do what they need to do because they are not working. They are going to get significantly more take-home pay than they did for working. And that's just not a pro-employment policy.
Larry, one of the things that struck me this week was the CDC coming out with numbers showing that the life expectancy of the average American has gone down by a full year in 2020, and disproportionately according to race and ethnicity. What do you make of that? Is there a larger story there, or is it just the one-off of the pandemic?
Look, life expectancy is formed from age-specific death rates at each age, and they obviously went up this year because of COVID, and they obviously went up more for people who were more disadvantaged in groups that were more disadvantaged. So this year's statistic is driven by COVID. You know, I find it ironic and pathetic that the progressive wing of the Democratic Party, people like Senator Warren and Senator Sanders, are all excited to give $50,000 or more of debt relief to young people who are working at Wall Street investment banks making six-digit sums of money, rather than focusing on the needs of the high school dropouts, the needs of those who are graduating from high school but not going on to college and need specific training. And so I hope that progressives will disconnect from the elite concerns of Ivy League college graduates, of those with graduate degrees, and focus on the people they should be representing, the people who have been left behind.
So let's wrap up the week here with a quick round of Summer Says. Let's start with the Texas energy crisis. We've all been watching it. It's been awful what's happened to those people down there. Do you think that that crisis will speed up or slow down President Biden's quest for green energy?
Not much either way. Maybe it'll encourage some more renewable investment. On the other hand, solar power wouldn't have been working that well in Texas this month.
When do you think the Fed will raise interest rates?
Sooner than they think and sooner than the market thinks. I'd expect rate hikes to be underway by the end, well underway by the end of 2022.
Will its hands be forced essentially by inflation?
I think a combination of inflation and perhaps an overheating economy and fiscal policy on fire, particularly if we actually build back better. And look, returning to more normal interest rates could be okay, but it's going to be a very challenging transition. And I must say, it doesn't seem to me from the Fed's comments, which are all on the side of resisting deflation, all on the side of promoting social equality. I think the Fed is not recognizing the era that they're headed into, where they're going to face the kinds of challenges that the Fed faced in the 1970s. The Fed failed in the 1970s, and I think if the Fed wants to not fail, they're going to have to start recognizing the reality of those challenges, and that's going to mean a significant change in their tone.
And finally, Larry, we've talked more than once about the great and growing issue of income inequality in this country. Give us a projection. 1 year from today, will it be better or worse than it is right now?
Probably better because of all the transfers that are being made to those with lower incomes, things like the unemployment insurance payments that are so generous. But whether it will be sustainably better, whether a foundation for real progress will have been laid, I think that's less clear.
Okay, thank you so much to our special contributor to Wall Street Week. He's Larry Summers of Harvard. Finally, one more thought. How do you kiss a baby virtually? If you're not sick of Zoom and FaceTime and all those virtual ways of meeting, you just haven't been paying attention. The lighting that's never quite right, being muted when you don't want to be, and praying that you're muted when you think you are, and what is with all those elaborate virtual backdrops we see? But if you think you're struggling with our new virtual world, pity the poor politicians. Their life's blood is pressing the flesh and looking you right in the eye and getting a feel of the room. Just about none of that is happening these days, even as New York moves toward choosing its next leader in the fall, which means there's a large number of contenders roaming the 5 boroughs day and night without leaving their living rooms or their dens or their closets or wherever. The good news is they never need to go anywhere. The bad news is they really have no excuse to miss a gathering anywhere in the city, no matter how small.
You can get up to a lot of forums all over the city and draw New Yorkers independent of where you are.
So this November, the voters of New York City will get to choose their leader, a leader they hope will lead a city badly in need of recovery.
I was very worried for a variety of reasons about the prospects for New York City. I am much more concerned today.
But it's not the first time this city has had to come back when some have counted it out. And as Wes Moore of Robin Hood Foundation says, you don't want to bet against New York.
You don't bet against New York because you don't bet against New Yorkers.
That does it for this episode of Wall Street Week. I'm David Westin. This is Bloomberg. See you next week.